Hello, everybody, and welcome again to another edition of Ray White Commercial, RWC's Between the Lines Live. My name is Vanessa Rader. I'm the Head of Research at Ray White, and I'm back in Perth today and talking to Brett Wilkins. So thank you for joining us, Brett. Brett, we've spoken to Brett before. We know Brett is a wealth of knowledge, Director of Capital Transactions here at the RWC WA office. So thank you for joining us.
Always good to talk to you, Vanessa.
It's always lovely to talk to you. We've been around for a long time. You've been around much longer than I have, though, Brett. And we can talk. We can talk about well, you're a wealth of knowledge, and I love talking to people that just know what they're talking about, as you know. So what I wanted to do today is, because I think the last time we chatted was at the end of last year. We did like a full-on wrap-up of what kind of happened in WA in 2025. Here we are, the second half of the year. Let's talk about the what's hot and what's not in WA. Obviously, economy still, trekking along reasonably well. It's one of the only markets where we haven't seen an uplift in unemployment rates compared to the rest of the country. Employment's looking pretty good. We're still seeing, the resi market has had a very, very good run, starting to slow down now, just like the rest of the country. So that's all good. But I want to talk about commercial, and I want to talk about the different asset classes and where you see the next, let's call it 12 months.
Sure.
Expectations around that. So ready to dive in?
Sure.
Am I just going to do rapid fire? Let's go through the asset classes.
Let's go for it.
Okay. All right. I want to start with office. Like we did have a discussion not too long ago with Stephen from your office and also Gavin talking about office as being a bit of a contrary play. What are your thoughts?
Totally. Underloved, underappreciated, not considered enough, and should be. And if I was back running my investment company or I had a bigger budget, I would be diving deep into quality offices in Perth.
Yeah. So the key being quality.
And I think that goes right across the whole market, especially in the last 6 months. And there's a change, and I'm going off offices for a second now, is I think the differential between quality and average has now widened.
Mm-hmm.
And that was happening before interest rates, war and budgets. Mm-hmm. There's still really good demand for quality assets, no matter what they are. But average assets have got a lot more difficult to sell and price. But I think the number one unloved asset class that is not deserved is CBD offices.
Yeah, okay. Well, if you think about it, if you wanted to build, like we're at the end of the supply pipeline here in the Perth market, if you wanted to build an office building, like that's not coming out of the ground for another 5 years at least, if not like 8 years. And in terms of the cost it would to build something like that in today's market, you'll be having to charge well in excess of $1,000.
I mean,
rent.
I haven't done the detailed QS investigation, but the experts that have tell me you're going to require between $1,100 to $1,400 a metre
seems right to me,
net, with only around 20% incentive.
Yep.
And that's what's required to make any future office development work.
Yes.
Now, I've got the FMG building 256 St George's Terrace for sale at the moment. The net effective rent that they're paying after incentives is about $330 a metre.
Yeah, so it's such a wide disparity. So you can understand that those rents are just going to have to uplift.
They've got to uplift. Incentives are going to drop. Net absorption's still strong. Mm-hmm. We'll be interested to see the next property council figures, but it's still strong. Mm-hmm. There's only one way rents can go.
Mm. Yeah, that's a good point. But with secondary, the differential, like you said, between that prime and secondary widening. But if we're in a position where that vacancy completely kind of compresses in that A-grade stock, secondary will come up behind and it always does, but it takes longer for it to come through. So if you've got a good quality secondary asset, would it be a time to tart it up a little bit, put something, a good foyer, reno, those sort of things?
Certainly getting ready. And you've seen that already in West Perth, in Subiaco, and then some other suburban locations. I mean, the secondary offices that, give reasonable quality office accommodation, they'll perform well too.
Okay. So office.
And you really are going into those at the bottom of the cycle.
Yeah. Yeah, there's no doubt about that.
Yeah.
There's some interesting numbers there. If your net effective rents are, less than 400, that's a big wide variation in what you can build it today. And the prices of construction not going down, only continues to go up.
Oh.
The issues with trade and labour and stuff, that's not going away. That's just continuing to increase.
No, absolutely.
Okay, so office.
Yeah.
Okay, office. Contrary view. Office, like contrary play, I should say. Office. Retail. So retail has been the darling, last year. We're not building a lot of retail. Population growth, particularly here in WA, continues to be strong. And if you look at the expectation of population growth for the remainder of this year and into next, it's rivaling Queensland in a quantum percentage growth change.
Yeah.
Retail still feeling
No,
positive?
still strong, still huge demand. Locally, the Singaporeans love retail centres now, or have for a while now, but yeah, they're certainly very strong in their inquiry. And the Eastern States buyers.
Yep.
Yeah, predominantly neighbourhood or non-discretionary retail.
So small convenience type retail rather than a...
Food, booze and drugs.
Yeah, okay.
And needles for medical, healthcare.
Yeah.
But no, that's still really strong.
Okay. So retail, still feeling optimistic
Yeah.
about retail. How about things like fast food, that sort of
Fast
retail?
food, I mean, I still don't understand some of the dynamics and some of the yields that sort of fast food sells for. So amazing yields.
Well, who is buying the fast food? Is it kind of
privates.
small privates?
Small privates, but when they're buying them at 100 points less than what a 10-year bond is, I still shake my head and go I just don't quite get it. But no, super strong.
Okay, so that's retail.
Yeah.
So what about industrial? So industrial, we have that undersupply, I suppose, in terms of land. Land availability is tough. Again, same dynamics, cost of construction. We're seeing a lot more with the changes in budget, changes in terms of negative gearing, and even self-managed super funds. People still able to purchase, mum and dad investors able to purchase and get those kind of incentives on a commercial property.
Yeah.
So where we've seen, there's some pivot to people looking at diversifying their property portfolio, not dissimilar to COVID. We saw the same thing happen when interest rates were very low and the returns look, tight for a residential, so commercial looks rather attractive.
Yeah.
Thoughts on where we think industrial is going to go? Because there has been a bit of there was some softening in the market. Vacancy increased a little bit, but
it's softened. It's just gone from super, super strong to strong.
Yeah.
And I think it's really important in industrial to also make sure you understand the owner-occupier effect. So the major demand in industrial is actually owner-occupiers, which we've got a whole office that deals a lot with those. And there's not a week goes by that even, I don't specialise in sort of vacant industrial.
Yes.
But there's not a week go by that you don't get a friend or a friend of a friend saying, I need 2, 3, 5, 10,000 metres of industrial. What have you got?
Yes.
And there's nothing because of supply.
Yes.
Yields have blown out a little bit, not recently, but they did blow out with increased in interest rates.
Yes.
They're anywhere between 6 to 7%, depending on what you're talking about. But the demand from owner-occupiers is strong. The supply of industrial land is negligible, and none of that's getting cheaper.
So when you say you get these kind of call-ups, these kind of looking for that asset to purchase, so we're even talking about kind of secondary stock because the built form now is just so valuable because the replacement cost is so
tough. Look, some of them locations that were very secondary or even what's lower than secondary,
tertiary.
Like more than acceptable at the moment.
Wow.
Super strong inquiry.
Okay, and how about investment from, say, East Coast? Because industrial has got to be like the kind of perfect asset class for a lot of those kind of mum and dad investors. You can get assets. There's a spectrum from quite small and inexpensive through the big logistics sort of institutional type stuff. So industrial, and in terms of yield, looks attractive, and the yield play in Perth compared to those East Coast markets quite different.
Let's talk about the yield play in a second.
Okay.
Yeah, and look, the demand's all over from industrial, from the institutions. I still 4 years after selling Jandakot Airport, still get inquiries off Asian and Eastern States institutions to, can you find me $1 billion industrial portfolio? And they're like, it's like pretty easy. But right through to the small privates, the large syndicators, there's a lot of demand for industrial. It's seen as a very, very positive asset. Yield play, I think it's right across all asset classes. We have, I'm generalising obviously, there's a 100-point differential between Perth investments and Eastern States investments. Now, I think it's totally ridiculous, and I could argue very strongly that it should be the other way around, given our economy, given our rental growth.
You're a Perth person, Brett.
Well, it's not hard to sell Perth, given the economics.
Yes.
But the reality is there's 100 points differential. So we get a lot of Eastern States buyers. And
expectation of that is going to just continue.
Yeah.
Because it just looks like good value.
Yeah.
Like, we've got a lot of what's hot, I've got to say. We've got a lot of positivity here. So what else can we go? How about service stations?
Service stations I still like. I've liked for a long time. There's at least 100 to 150 point differential between Perth and Eastern States.
I feel like there's some of that service station activity is kind of settled down a bit in the Eastern States. But then, like, you see some of those results and there's an auction that happens and then, like, there's yields of, 5% or sub 5% in some cases.
Yeah.
A lot of people still do like them, just like the fast food.
Yeah.
That kind of idea of just long-term lease.
Yeah.
No one's freaked out by all these electric cars or anything.
Look, I like service stations a lot. And again, it's like everything. You've got to differentiate between the quality properties and the very secondary properties. I mean, the quality properties, if we all do start, flying around in hovercrafts and spaceships instead of
far away. So it's not even Perth having the conversation.
No, but you can go and turn that into a McDonald's or Kentucky Fried or whatever you want to do on a really, really good commercial site.
Yes.
Obviously, if it's on a secondary site, there are other issues then as what are the alternative uses for that. But, look, they're not the easiest asset to sell. But
also the tenancy too. Like, there's different qualities of tenant, I suppose, if you've got a multinational versus kind of more of a local play.
I mean, there gets to be some concern about the contamination, but we've got very strong Contamination Act.
Yes.
I know from very personal experiences that the big service station operators take that so seriously.
Yeah. I feel like that the argument about the contaminations just seems to have gone away over time, just because there is so many more safeguards around it for the
absolutely
for the owner to make sure that they're left with
absolutely,
land
but it still does get raised,
of course,
and the EV issue gets raised. But I mean, people are still needing fuel.
You have an EV, don't you?
No, I don't.
No, okay,
no.
sorry.
No,
you or someone else in the office. A hybrid.
Yeah, hybrid.
Okay.
But I still go to my service station once a week and fill up with fuel.
Yeah. And a lot of service stations if there's new service stations being built, they all kind of incorporate kind of EVs and stuff in them, because that's like, we've still got such a big car population, that is going to need fuel for a long time.
I think it's a great asset class.
Yeah, okay. Yeah. Now, something that's been a little tougher around the country, so keen to hear your WA thoughts. East Coast, we've had a lot of issues with childcare.
Yeah.
So childcare is an asset class that, a lot of people invested in, and also in terms of price point, attractive to a lot of those kind of first-time buyers or those kind of, mum and dad investors, private investors. In the East Coast, we've had some issues in regards to safety and, for kids, and it continues to be hard to get the good staffing. Staffing is a massive issue. We've seen a lot of oversupply in some markets as well, particularly in Sydney and to some extent in Melbourne as well. So what's going on? So it's one of those things where you have to look very carefully at an individual asset. Is it the same fundamentals here or not the same?
No, very much the same. I couldn't agree more with you. I mean, and I've been contrarian for some time on childcare. I mean, yes, good childcare with good tenants in good locations, fantastic. But, there's no impediment to competition. Just go and put up a childcare centre anywhere just about. So, you get to suburbs that just oversupplied. The corporates, in some cases, have not done the best job with managing their particular operations, as you said, because of safety issues that have been in the front page of the newspapers regularly. I mean, I don't think that some of the pressures that the government have been putting on childcare businesses help, regulations and staffing costs. I think it's look, they still sell.
Yes.
And there's still demand for them.
Yep.
But I think that they should be looking. You got to look at it very carefully.
In the past, there used to be a lot of operators that would develop their own sites, or they would buy their own sites, but now is that more of a move to leasing? Those operators are just happy to lease a facility, particularly if they're unsure with the future longevity perhaps of it.
Look, it depends.
Okay.
I mean, you've got some operators that previously developed previously owned, but capital constraints. For some groups, it's what's the best use of their capital. They'll get a better return on equity running a business than they'd will property. So it's a mixture of everything.
We did a webinar with someone in our Western Sydney office only a couple of months ago, and we had an architect on talking about how important, particularly when it comes to childcare, they just look different if you are developing childcare in an area because there's still areas that require childcare, but they just look different. So in the past, they were all about these kind of mega centres, as many kids as you could fit possibly on there, whereas now it's more about making sure you have that good mix of indoor, outdoor, smaller number of children because the staffing issue is so difficult, and also making sure the staff have a reasonable amenity and things like that. Is that that just makes sense? So it doesn't matter where you are. I think that those fundamentals still at play.
And there's a group that I've done a lot of work with lately, and they've made sure that the childcare centres that they're opening up are very boutique. Mm-hmm. They feel boutique. They are totally over supplied with the public open space. Well, not public, but the open space
requirements.
There's no meeting the minimum standards there.
Yes.
It is going way overboard.
Yes.
And just providing a level of service and a level of quality of property.
Yes.
That's better than the competition.
Yeah. Well, that's how you keep occupancy up, particularly if there's competition in your marketplace.
Yeah. And still strong demand.
Yeah. And also that draws the good quality workforce into your establishment, and that keeps them there, and then that means the kids are happy, that parents are happy to pay, and it's all that's interesting. But I think childcare in terms of yield, have you seen much kind of change? But it's just got to do with the location. Like there's some that are going to perform well and some that.
But look, absolutely, but yields are still blown out, and that's just really a factor of interest rates. Mm-hmm. The cost of money is blown out, and so have yields.
Yeah. Okay. How about medical?
Medical,
you do a lot of work in the medical space.
Do a lot of medical. Still really strong demand from the institutions and some of the larger syndicates and high net worths. They range from day hospitals, specialist medical centres, right through to the standard GP practices. They're seen as a little bit more recession-proof, harder to compete with. Because whilst you can set up a medical centre, you can't just go and get 10 doctors to occupy it that easily.
Yeah.
There's really good demand for medical centres still.
And with all the specialist suites and things, are you just seeing kind of like doctors, like owner-occupier type, like a dentist or whatever, wanting to have control over their own kind of destiny, if you like, and finding... Are they buying their own? Because they're sticky tenants.
Yeah.
Like they don't move. Like think about your local doctor. He's probably the local doctor you've been to that hasn't moved around. Do we see a little bit of that? Is there a bit of owner-occupier buying assets? Or?
Look, a mixture. Some of the specialists certainly have been buying. We've sold a number of medical suites down at Murdoch, around the Murdoch Hospital recently. That's all owner-occupiers. We've got others. It's a mixture there. Some of the GP practices, a couple of the larger GP practices will only operate out of property that they own because they just want to control everything. And then you've got other specialist stroke GP practices that, no, our capital, our equity goes into the business, not into the property.
Okay. So medical. Medical is a hot or not?
Yeah, no, medical's hot.
Medical's hot.
Medical's hot.
I want to kind of pivot to something that's more a little bit residential in flavour.
Yeah.
Like we've obviously seen, just average house prices and unit prices here in Perth exceed growth compared to any other city in Australia, and it's been like that for the last, say, 5 years. Rents rivaling every other market, bar maybe Sydney, I think, it's the second highest in the country when you talk about house and unit rents. Still hard to get things built. Cost of construction remains high. Yeah. Yes, interest rates. So they're starting to slow down a little bit, but we have got that population increase continue to happen. With rents so high, vacancies remain tight. What about kind of not necessarily institutional, but developer-led building of assets like a co-living, build-to-rent, those sort of assets?
It's an interesting subject. I mean, there's certainly a lot more discussion on it. There's been a lot maybe going back from not this year, but going backwards, there was a lot more talk than there was action. Mm-hmm. now with the opening of the Edith Cowan University in the city, you've had a significant focus on BTR and co-living around ECU.
Yeah. Well, you've had some good student accommodation, development over the years.
Yeah.
There are a handful of good ones just in the city.
Yeah, and what Curtin did and some others, is really good quality. ECU has obviously been the centrepiece of that of late, and there's no shortage of inquiry from everywhere on BTR or student PBSA or co-living, all around ECU. But there are certainly some developers that are looking at co-living in alternative locations as well.
Yeah, so I'm not talking about targeting kind of students. More those, single person households looking for something that's a little bit more affordable to rent.
I've had that as far south as Mandurah on some sites that we sold about 2 years ago.
Yep.
Opening soon. Certainly some co-living development sites we sold up in Joondalup. So no, that's right across the whole Perth metropolitan area. Big issues still with that. It's just construction prices still.
Yeah. So
it's still just as expensive to build those as it is a stock standard house.
Yeah, but your return opportunities, because I think a lot of we've seen developers in the East Coast looking at these a little bit more carefully, and they just retain the assets. They're not looking to on-sell them. They're just looking for that really good quality income
cash
stream.
Flow. Yeah,
cash flow.
Yeah.
And with all the investment into just your trades and stuff are just so hard to get these days. It's just really costly.
Yeah.
I forgot to mention this when we were talking about industrial, and my mind thought when you started talking about the airport, but we've spoken about this a lot of times before, is self-storage.
Yeah.
Self-storage is there's not an awful lot of them around, and there is a portfolio will sell once in a blue moon. Yeah. So I'm sure your Asian investors would be keen on that. Any kind of movement in that, or is that still remain just like
still lots of inquiry from the 2 or 3 big operators?
Yeah.
National Storage, Storage King, Kennards. They've all expanded. They're all seeking to expand further. Really great demand from investors, but very, very little opportunity for them. But National Storage obviously now sold out to Brookfield. That'll be interesting to what unfolds there. So I think there'll be further expansion there.
It's so weird that self-storage is such a big thing. People just like storing their crap.
Yeah. No. And once they get in there and store their crap in there,
it's too hard to take it out, and then they just keep on paying and the rents just go up all the time. They don't even realise. It just keeps on going.
It is interesting, like all asset classes though, and I'm not the expert on the US self-storage sector, but that went from a period of totally undersupplied, one of the darlings of the US property scene, to oversupplied and self-storage values collapsing.
Yeah.
You always run you run that risk with everything.
Yeah, of course. And staying on that industrial kind of flavour, obviously the talking point of the last, it's been for a long time, but let's say this year at least, is data centres.
Yeah.
What was that?
There'd be one inquiry a week from a major developer. And so we're not talking about people that have just got a dream and no idea what they're doing.
Yes.
We are talking from major developers. Perth, East Coast developers, 1 or 2 out of Singapore lately. But obviously the specifics of setting up a data centre, I mean, I've got a very small understanding of them.
Very complicated.
Yeah, very complicated, huge power demands, huge water demands.
And also just connectivity. It needs to be in a location where there is that good. But Perth is in a ripe location in terms of connectivity into Asia.
And Africa.
Yeah, okay.
Look, there's good demand. I think it can only go one way.
Yes.
But very difficult to meet the requirements.
Okay. Interesting.
And of course now we've got political parties that want to stop data centres totally.
Yeah, well, that's unfortunately everyone's using AI, and but I don't think people seem to understand the amount of data that we do use. It's not going backwards; it's only increasing. And even if you're just chatting to your ChatGPT, sending them a thanks for your helping you with something is causing a reaction in a data center somewhere that requires cooling, heating, and all those sort of things. So it's an interesting market, and those yields on those kind of portfolios that have sold have been like eye-watering.
Yeah.
But the other thing that's kind of interesting with data centers is that the technology continues to evolve and change. Yeah. So that's the thing that I'm kind of more curious about is how do you future proof some of these assets? I really don't know what because they keep on changing.
Yeah.
And the ESG requirements, and because all institutions or offshore, but like institutions are buying these assets.
Should we talk about the small mini nuclear power stations that
required to generate
some of those? Yeah.
Power for these things to operate.
Yeah, I don't quite see that happening yet in Australia.
No, definitely not. Okay, well that covers off everything, I think. Yeah. So so we've got to ask you the big question. I reckon I know what the answer is. But later this year, second half of the year, you've got money to spend. Where do you feel the most pull towards in terms of the asset class that excites you the most? The opportunity excites you the most.
If we're talking about...
Okay, you got to do a different price point. Sorry,
different price points.
Okay, so if you're sub little sub 5,
sub
and
10,
then sub 10, and then sub 50, and then sub 150.
Look, for sub 10 mil blocks of flats that we haven't talked about.
We haven't spoken about that yet. Blocks of flats.
So Stephen Harrison and I did a podcast on this recently.
Yep.
I mean, blocks of flats are still incredibly sought after.
Yep.
We're just in the process of finalising a sale that we've done of a block of 11 units. It's still under conditional contract. But that was like I think 195 inquiries, 35 inspections and 11 offers. And it certainly is selling for a strong price.
Yeah, well, with the like I said, that residential rental prices are so and there's only upside. You can refurbishment. You can start a subdivide later down the track if you wanted to.
Yeah.
Can I ask a question on that? With those sort of assets,
you can ask any question you want.
Oh, well, I am in the driver's seat, so I can ask whatever I like. But with a lot of these assets, and I did a podcast, I think it was at the end of last year, with our Queensland team because Special Projects they do a lot of these. James Hanley, and they have a lot of these assets that are then not necessarily just put out to the rental pool, but through short-term letting. And they do them through Airbnb. They get this kind of elevated. Do you see much of that happening?
It's a mixture.
Yeah.
So a lot of the purchasers,
yep.
Some of them are just want to just keep it stock standard residential letting. Some of them definitely have shifted into short stay. Mm-hmm. But then the other major driving force on the buyers are actually businesses that want somewhere for their foreign staff.
Yeah. Okay.
And they make up a really significant buying profile. And, because with the shortage of labourers and trades, so you can go and bring in some staff, whether it's from Asia, the Philippines, South Africa, whatever. Wow. But then where are you going to put them? Yeah. Where are they going to stay? Where are they going to sleep?
Yeah.
And so for a lot of the significant businesses, that is a major issue. So they are a major buyer profile there.
Wow. So that's so then that they're offering a furnished shop, ready to...
Yeah, come and work for me. And
here's somewhere to stay.
Yeah.
God, because in Queensland, when we were talking about this with James, he was because there's so much kind of fly in, fly out into Queensland by trades from like southern states because of the runway to the Olympics infrastructure. So that's why a lot of these like furnished assets they do it via Airbnb. They get these elevated rents, and they're really Monday to Friday stays. But coming in from Asia and that's interesting. Isn't
Painters, tilers, welders, etc.
Oh, wow.
They've got to have somewhere to sleep.
Yeah.
So that's been quite interesting.
Yeah.
So that's one of my favourite asset classes under 10 million.
Okay.
As well as service stations, small industrial, and small retail. Not that you get much retail under 10 million. Mm-hmm. 10 to 50 million. Look, I like retail. I like industrial. Still like some of the small neighbourhood centres. Medical, definitely. So medical, and medical actually ranges from 5 million to 100 million.
Yeah.
And then look, anything above say $30 million, actually a bit less than that. I'm really strong in quality offices. I think that's where people are going to make some real good money.
Mm. Yeah, office market.
Yeah,
you heard it here first, everyone. Well, actually, you didn't hear it. We talked about this actually just only with Stephen and Gavin not long ago. Yeah. But I can't disagree with you. Just that replacement cost is so, different.
I mean, I think it's got to, before we wind up, with offices, I think it's really important. I mean, the reason why some people don't like offices, and what the list is, I'll work from home, but that's not strong in WA. We're not living in the Victorian Socialist Republic. Sorry,
okay. Nothing goes by without me putting some sort of crap on the Victorian market. I don't mean to do that, but I agree with you. Those changes to legislation regarding work from home is just ridiculous because they've got the worst office market in the country. But anyway, let's move on.
How to put a knife into it.
Yeah.
So the work from home, it's not a big factor here. It's a small factor.
Yes.
And then the other interesting,
which we haven't spoken about is I know what you're going to say. AI. Yeah.
And I'm marketing office buildings, and you get people like, we're no longer going to need office buildings, office space. AI is going to take care of everything. Look, I might be proven wrong. Mm-hmm. I don't believe it. I'm old enough to remember when the first computers came in, or the first fax machine, when the internet came in. When internet came in, that was the end of it all. The office market was going to totally, absolutely collapse. I think like all of those, there are going to be losers and there are going to be winners.
Yes.
Now, I don't know exactly who the winners out of AI are yet.
Yeah.
But, I don't think we're going to stop needing office space.
Yeah, we've seen a lot of businesses consolidate their, there's been redundancies and things, particularly in the tech sort of space. But then there's a requirement, there's new jobs that continue to emerge out of the fact that there's AI. And if we get better efficiencies and things, I think you're right. I don't think headcount's going to remarkably change, and the requirement for office is definitely going to be something that's here to stay.
Yeah.
But anyway, we are well out of time. As it's always a pleasure talking to you, Brett, which is a really honest, forthright, can do this every day. If there was more people like you to chat to in the marketplace, it's also so good. But if you've got any questions about WA, definitely hit up Brett. Sorry, Brett. Brett Wilkins from our RWC WA business. And thank you for thank you for being here and being on. So everyone, as always, you can watch back this or any of the previous episodes on our Ray White commercial YouTube account. This will be up on Spotify. Make sure you go back and listen to some of the things that me and Brett spoke about maybe at the end of last year and see if we got it right or wrong, and where we are. I think that we got it all right. But as always, lovely to see you. My name's Vanessa Rader, and we will see you next time. Thank you.
Thank you.
Hello, everybody, and welcome again to another...